All right, welcome to a video, and here we're going to talk about the higher time frame charts and how we use them to our advantage. Okay, we kind of use these as our lay-in. So what I like to call this is our lay-in process, where we basically get a rough draft on our charts. And if there's any artists here listening to this video, it's kind of like when you start off a live figure drawing, right? And when you see the drawing or the person, you start piecing it into shapes. We don't just start drawing the detail in and trying to get every little crevice of our picture in front of us or our person in front of us, right? We need to start just developing a nice composition of our drawing. And that's the same thing that we have here on the charts. So I just identify some key zones, like here we had this that broke structure, came down, right, from this point of demand, right? So there might be some POIs left in here, but for the sake of just reducing a stop loss, I'm just gonna leave it to here and if we start breaking structure to the upside. Now, if we don't, we keep falling, then maybe I'll look for POIs in here or in here, okay? Now, what I like to look for on the higher time frame is the same thing that I look for on the lower time frame. It's just a lower high that creates a higher high. Okay, I mean a higher low that creates a higher high, right? So here we break structure to the upside and we create a higher high than this side over here and through all these short-term highs. Now this is our major swing point, right, from here to here all the way up. So this is a major swing point and this is a minor swing point. So there could possibly be two invalidation points here. We would just have to make sure. In fact, when we look at all these are minor swing points that broke structure, right? So this was confirming bearish prices, right? So here we have a retracement. We fail to make a new high to close, right? We're always looking for a body closure. If it's just a wick, then we don't care about that. So we're looking for a body closure up here, which it looks like equal highs are slightly above, which is fine. And then it fails to make a new closure above here. It fails to break structure to the upside. So we break this low, right? Break, and then we retest here and then drop, right? So this up movement, if you're able to catch it, then that would be, a really great entry for you to take this to the downside if you were swing trading, but we're not, okay? And where would our target be? It would be back here in this consolidation, right? So we have left this unmitigated. So I would look for buys around this area here, okay? Inside this consolidation. And we can see that this wick, we can see that this wick here, stop ran these lows back here. Okay, so it grabbed liquidity, moved to the upside. Now we're mitigating here, right? So, or possibly mitigating here. There still can be some downside because it's just this momentum, right? And then we also have this unmitigated price range right here. Okay, so that's how I will be breaking down my daily chart. Now, obviously I won't have these, that was just for show and tell purposes. And then if we look at our weekly, to get our true invalidation point would be here, right? If we are really gonna go bearish, we have to break this structural point here, right? That would confirm more bearishness, maybe in here for retracement back up and then coming down, right? Because this is our weekly swing point to create the high, and then inside there was our micro swing point. Okay, so for me, we're looking at this, we're extremely bullish. We have a retracement here. We come up and we break structure to the upside from here. And every time we break structure, it's most likely going to some sort of retracement. Now this is a pretty steep drop, but we also had a steep drop over here and then price picked up fairly quickly to continue up, right? So now we have a pretty steep drop here. So possibly seeing some upside and then maybe we come down and break structure. But we don't know yet, okay? So that's basically how I'm identifying structure from the higher time frame. Okay, so let's go down to a lower time frame. So as of now, like based on the daily, I want to be bearish up into certain levels, up into this level. And then right now to get bearish is probably too late. So we kind of want to scout for buys in this level and short-term sells. Like if we get into sells, we want to be short-term. Even with buys, we somewhat want to be short-term until we get a nice like H1 break of structure to the upside on the lower time frames. So from here, right, I'm going to remove this and just leave this line here as my validation point. And then this would be, this high would be our next validation point of continuing a bullish process, right? On high at least. Then I would simply just drop down to an H4 time frame and just start reducing my zones, right? So from here, I'd maybe want to reduce it to this zone here, like so, leaving this intact. Okay, and then from here, I would just be simply reducing it down to this level, like so. Okay, so I have some zones marked out already, right? And then we have a zone here on the H4. Leave that open up like that, and then I'd drop down to another time frame like the H1, and then just reduce my zones a little bit more. Okay, and we can reduce it to this price gap here. Okay, now I can easily run it like this, and if it continues lower, I can look for more price action in here and see what we can do about that. Okay, now what I want to talk about is kind of the way price works, right? So basically, once we run out of supply, right? Once we run out, we can see shorts covering to bring price up and sell a little bit more. But right now, like for example, in this area we have a POC, right? We have like multiple points of control in here, right? So there was a lot of transactions going on in here where we can possibly pick up some orders to continue to the upside, right? And that's why I use volume point of control, but that's for another video. Looking back here, we have some volume up here, right? And this is on the H1. I could reduce this a little bit more, right? And I'm really just marking out zones just to see where I should be buying or selling. Like if we reach down here, I can wait for a reaction and then catch a buy to the upside as possible retracement, or I can look for sells in here as possible continuation to the downside, right? Especially we have volume up here, and as price moves away, we can come back in here and then maybe possibly continue to the downside. We don't know yet. Okay, we just have to observe price. From there, I'll take it down to the 30-minute chart and just reduce again. Okay, and I can even reduce it just to this way, right? Because I'm not using these as zones to sell from. I'm looking at these as zones to get a reaction from, and depending on that reaction, then I can take a certain type of trade. Okay, and we can possibly reduce this a little bit more. I'll just probably leave that zone there like that. Okay, so we have some liquidity up here in the form of these retail resistance, and I like to mark out the liquidity points to get a better target. Right now, that seems to be the only liquidity to the upside right now that I can possibly target. We just ran all these lows, right, which is where liquidity was residing. Okay, this looks like a fine level to me. And as we break this down a little bit more, possible sells from here, like short-term sells. In this type of market, when we have a massive drop like this, like with momentum to the downside, it's better to hold your sells and take short-term buys. So that's pretty obvious, right? We don't want to be holding any type of buys for any amount of time until we confirm a bullish trend, right? Right now, it would be a lot better to hold a sell, but even then, if we're scalping, we don't really need to. But if you want to capitalize a little bit more, you know, catch like 3 to 5R, then that's perfectly fine. Once you get good at just being green at the end of the day, okay? And then we'll break it down from the 5-minute chart. Okay, what do we see? You can see we opened up, we got the stops up here, and we moved down, right? So we had this massive move downwards, right? We had some short covering here. This comes up and runs these stops, right? And then we have several zones in here, right, that we could have been selling from. And from here, I would just be marking out my zones. Right, I'm looking at areas where I can get a reaction. That's about it. Remember, I'm not using these as confluence. I mean, as areas to completely solve, because this could easily get ran out, right? We have liquidity in the form of trend line here. All this can just get taken, right? Up into this POI maybe on a lower time frame. This would have some sort of gap in there. We don't know yet. Okay, we have no idea. We wait for the reaction. Okay, so that's basically how I identify certain zones that I want to be taking buys or sells from, depending on the type of reaction that we get from there. Okay, so we're just going to be looking for price to hit these levels and then try to find an entry. Okay, and as we're on this higher time frame, what I'm also looking for is sorry, not what I'm looking for, but what I'm looking at is multiple frames. Right, so I will be looking at the M5, and then for entries, I'll be looking at my M1 here. Okay, and as price gets into these zones, for example, up here, you can take a risk. If you're a risky trader, you can take a risk and just short from this level, because it did in fact cause a break of structure, right? From here, we also caused one from here. So you can look to take a trade or reaction from these levels, or we can just wait for the confirmation, right? As price comes up in here and breaks structure to the downside like that and retraces, we can take those type of trades as well. Or you can take an early sell, get the reaction and get out of the market, wait for the mitigation, come back, enter, and then you can hold that for a little bit longer. Okay. So that's just basically how I'm looking at my higher time frame perspectives. Let's go back and look at that again from the daily. Okay. So as you can see, right, we have some zones marked out. We already know where price can possibly head towards. And let's say we were taking a sell from here, I would be targeting these lows down here, right? I'd be targeting this OB or something, right? Like I could hold for that as a target. Okay, and if I took a sell, I could get a sell in here and then possibly come lower, right? Or I could sell from here. Okay, I hope that helps you guys out with identifying zones. Let's do one more actually, just so that you guys can get the hang of it. And let me take this volume profile off for now. Okay, so we're gonna look at our daily chart, and we can see we had a massive drop, right, from the daily. This was our previous day's low, previous day's high, and that's what I'm always marking out. So imagine, not imagine, but when you see an expansion down like this, and then we make a new low, like a new low here, this bar, right, traded up into this area. That doesn't necessarily mean you're going to get an inside day, right? What we should expect is, as it's trading up, that it should trade through that previous low as this is coming down, right? Now you could, after a big expansion, get some sort of consolidation, right? But if we look, what do we have here at this point? Right, we have some consolidation. So I expect that either price is going to run a little bit lower and take out these stops into some sort of POI over here, but return and mitigate this consolidation area, and then possibly run up and maybe trade up and through here. Okay. If we look at our weekly chart, we're still extremely bullish, right? Now we would have to break some swing point maybe here to confirm a bearish structure, but even then it's still quite bullish, you know. Maybe we get into this area down here. But for now, I'm still heavily bullish on this. I'm bearish on the daily, but bullish overall, right? So I'm going to be waiting for price to start breaking structure to the upside. If not, if we just break these lows, then I'll just look for some sells. But everything I'm doing is scalping, so it doesn't really matter. I just want to make that clear because we're just in and out of trades anyways. So from here, we would just break this price chart down, right? We would look at areas of interest such as here. Okay, that's another zone. And let me just move this. This would be a zone here. Right, it hasn't broken it yet, so let's go down to the 1 hour. And we can see that we've created equal lows. So price may come back and run this out. Right, and we're just reducing that. And we need to take a look back. And there's not too much I see. It could possibly just run all those lows and then continue higher, grab all that liquidity. And then we have, you know, several POIs. So we can look for probably most likely not going to happen today, because we are so far extended already from that. 30-minute zones. Okay, there's a POI that was left unmitigated here. And I'm just showing you how to mark out zones. That's it. We're not talking about anything else other than how we identify a zone for possible selling. Okay, and we have a zone here. And then we go down to and then we have three zones here. Okay, so that's literally all I'm looking at. Okay, and then on the 1 minute for entries. And we can even reduce this down to here. Right? And this is exactly where pretty much price ran to. So if we look here, we can see how like price came to that area. It moved up, back in. We never broke structure, right? But what do we have? If we go down to the 1 minute, right? Let me explain how this would have worked out. Okay. So now that we had our 5 minute zone and we have our 1 minute inside of that 5 minute, we've yet to break any structure, right? But we did leave behind liquidity, right? Remember, it's always going to leave behind liquidity and a POI. Okay, so our POI came from here, like that. Now we didn't break any structure, so I wouldn't have taken this buy whatsoever. Okay, that's not what I would be doing. Now, from here, and this is live price, right? From here, we're breaking structures to the upside because we have a swing point here that just got broken. Okay, so a valid POI to buy from would be here or here. And this is how you get very tiny stop losses and very low risk setups. Right, so let's just observe what happens here. Now, price may be reacting to this POI here. If it gets here, right? Because We are bearish, so this is most likely get some toughness to get through, but we'll see. It may come here, here, and then come up. Okay. The body was left untested, the wick was already tested. So we're just going to use the body. Same with here. Okay. So we'll just observe what will happen. Okay, so we would be in our trade and we'd be out of our trade. That's how quick it is. Okay, so you see how we just boom, boom, like that, we would be out. Now, if you had the patience to hold a little bit longer, you could run above these highs. But as a new student, all I want you to do is just take the first initial reaction. Okay, that's going to save you from a lot of losses. Okay, and it may not seem like a lot, but that was 8 pips. Okay, so 8 pips on a 5 loss, you know, that's around $400, $500. And you see how you would save yourself from taking a loss? A loss, right? Taking a loss. We'd be in and out of that trade, and we'd be up 400. If you have courage to hold, then you could hold for these highs up here. And if you have a good risk tolerance, you could hold to get stopped out. Okay, it's very dependent upon you. But we just want to trade these reactions. Okay, and you'll see how many wins you can take just doing this strategy over and over and over again when we go over more analysis. Okay. So that's how I do higher time frame, and that's the reactions I'm playing. These very tiny, tiny reactions that produce pretty substantial profits. Okay, and if you can do this and play the reactions, I know it doesn't seem much, but it is a lot of money, right? If that trade is $400, how many of these reaction plays can you get and win, right? Even if this gets stopped out, because we're not in the business of holding, right? We're in the business of just getting in and out of the trade, and occasionally we can take that nice swing up to the upside. But for now, build your account, get in, get out of your trade, and move on. All right, that's it for this video.